Peter Schiff Show.
Welcome back, everybody. This is Peter Schiff on SchiffRadio.com. And joining me now, noted author Robert Kiyosaki, who authored the phenomenally best-selling book, Rich Dad, Poor Dad, which I think has spawned several sequels. His most recent book is Unfair Advantage, The Power of Financial Education. I've got a copy in my hand right now. I'm holding it up for those of you who are watching on the video stream. Anyway, Robert, welcome to the show.
I'm honored to be in your program, Peter. You have a very good reputation in my world, at least.
Thank you. So, how many copies of Rich Dad, Poor Dad have you sold?
Almost 30 million worldwide.
I mean, that is an incredibly impressive number, especially for a nonfiction book. I mean, my book, Crash Proof and Crash Proof 2.0, I think total we've sold, I think maybe about 200,000 copies.
That's pretty good.
But you've sold, what, 20, 10, 100 times as many copies.
Well,
what do you attribute that success to?
Well, I think, you could call it, under a broad term, the truth, if you know what I mean. We get BS'd a lot by our government and our school system. And, people don't want to live below their means. They don't want to listen to Susie Orman about cut up your credit cards and live like a peasant,
Well, I would agree that, credit card debt is not the way to get rich. And I know you make the point in your books, and you make it again. I haven't read the entire book, Unfair Advantage, but I did read about the first third of it. That you make the point, which is correct, that in an inflationary environment like the one that exists today and the one that has existed in this country for many years, one of the ways to get rich is to use that to your advantage by borrowing money to acquire income-producing assets that service the debt so that you have positive cash flow, but that you own assets that will then appreciate that you didn't have to pay for.
Yeah, that's correct. It's never changed. An unfair advantage, the real positioning statement is what school will never teach you about money. And they'll never tell you the tax law. You don't go to, when I was in school, they never said this is the tax law. And as you know, the tax laws favor certain people and punish certain people. For example, when they say go to school and get a job, in other words, become an employee or become a doctor or a lawyer or an accountant, the smart kids, you pay the highest taxes possible. But tax is always revenue neutral. And the tax code of America is really designed to incentivize entrepreneurs. And so if they give entrepreneurs massive tax breaks, which I get huge tax refunds, and I make millions of dollars, but it's only because I'm doing what the government wants me to do.
Well, it depends on if you are investing in real estate, for example, I would say, yes, there are a lot of tax breaks that favor real estate. No.
Are you a tax accountant?
No, but...
Well, there's many tax breaks, and I think that's really the problem. If you read the book, you will find in there my tax strategist, Tom Wheelwright, who is a CPA, explains the tax code very simply to people. We're a capitalist country, and the tax code was written for entrepreneurs.
Well, I think the tax code is punitive against entrepreneurs because I think the rates are too high. I'm paying better than 40% of my income in taxes. And I don't see how the tax code is friendly to me. In fact, for example, I just started this radio station, and right now it's losing money. Yet I can't deduct any of those losses against my salary as CEO of Euro Pacific Capital, so I have to fund the losses out of pocket. I can't write it off against other forms of income.
Well, Peter, that's my whole point. Did you go to school to understand tax law?
Well, I went to school like everybody else to have a good time. And I graduated, and then I started working.
So Peter, I'd like to ask you to let me speak for a little while on this. So read the book. You'll find out the tax code was written for entrepreneurs. You've really got to understand that. So there's more than one way to skin the tax code. 90% of it is about how to not pay tax.
Well, I certainly know there is an army of accountants and lawyers that are paid a lot of money to help corporations figure out how to exploit those loopholes and reduce their taxes. No question about that.
Amen. GE paid $200 million to avoid taxation. And what I do is I follow the rules of the major corporations. And that's why unfair advantage is what school will never teach you about money. And so what you're saying to me is part of the problem. People don't understand it. So I made millions of dollars. I got a $2 million tax refund last month. And because that's what I studied. I have very good teams. Most CPAs are not very bright people. That's the problem. And if you're going to be successful, you have to have very bright CPAs. The other thing Unfair Advantage is about is not only does tax make you rich, but debt makes you rich. Unfortunately, because we have no financial education in our school systems, we're creating peasants out there.
Yeah,
people who work for guys like me.
It's not actually the debt; it's the inflation that wipes out the debt, that transfers the wealth of the savers to the debtors. So yes, so it's not the act of going into debt; it's the government's inflating those obligations away, and that's why inflation is nothing more than a transfer of wealth from the workers who have savings to wealthier people who have financial debt.
Yeah, I mean, that's exactly it. So what are you going to do about it? That's all I've been saying. What are you going to do about it?
And the kind of debt that most Americans have is credit card debt or student debt. And that's not the debt that makes you rich. That's the debt that makes you poor.
And that's why I say our schools don't tell people that. They don't teach you that. See, the problem with the schools, when they say we have financial education, so we bring in the bankers and we bring in financial planners to tell people to put money in a 401k and a mutual fund. Well, those are the guys that caused the financial crisis. And that's the school system is complicit because they're failing to give people adequate financial education. And that's what unfair advantage is what they will never teach you about money because they don't want you to know.
Well, most of the teachers in the school system have no money. They're teachers, and they've never done anything. They're the old expression, those who can do, those who can't teach.
Yeah,
and so they can't do anything else, so they're teaching.
Please, I'm not trying to degrade the teachers. I'm saying it's a system designed not to keep us in the dark. So the teachers are just pawns in the whole thing. That's why they're protesting at Madison, Wisconsin for more pensions. They want to work less and get paid more. Well, that's communism. And that's the problem is they don't have any financial education. And all unfair advantages is how a capitalist thinks. Because most people come out of school thinking like socialists or communists. The government's going to take care of me. The government should take over this. That's communism.
But
the government should take care of me is socialism.
I mean, what investments have you been making? Where are you investing your own money?
Nothing has changed, Peter. Nothing. I invest. I have businesses. I have massive tax breaks because I have employees. I invest in real estate because I provide housing. I use debt, so I use investment debt. But what
tax breaks do you get from having employees?
I get to write off a lot of my expenses. Your losses you can write off. I have a lot of employees.
But you're writing off the salary that you pay them. So that's, if you paid in salary, so you don't pay it in taxes, but you had to pay it in salary, it's still money you didn't earn. I don't see how I'm getting a tax break because I employ over 100 people. Yes, I write off from my corporate income taxes the salaries I pay my workers, but that doesn't help me because I paid it in salaries. I don't have the money anymore.
Well, Peter, you need a new accountant.
Maybe. I got to have a talk with my accountants because, like I said, I'm paying a fortune in taxes, I can't seem to find any breaks.
Well, that's what unfair advantage was written for.
Well, I got to read the rest of the book because I was in the first third and it didn't have any specifics on what I should do.
Yeah. Well, you have to have my book. There's 5 authors of it. They're all my advisor teams. Mm-hmm. And if you have a bad CPA, and there's a lot of bad CPAs, just like there's a lot of bad congressmen and senators who are attorneys, you're in trouble. So you have to understand, just read Unfair Advantage. It's about how debt and taxes make you rich.
All right. Well, you know what? I'm going to be thinking about that. Maybe I need to make some calls to look for some other accountants. But don't go away. We'll continue this conversation after the break. You're listening to Peter Schiff and Robert Kiyosaki on SchiffRadio.com.
Since the Peter Schiff Show was last on the air, the national debt added another $7.89 million.
Luckily, Peter's intelligence is growing twice as fast.
That's incredible.
Welcome back to your source of sanity in an insane world. It's the Peter Schiff Show.
Welcome back, everybody. We're continuing our discussion with Robert Kiyosaki. And, Rob, I think one of the things, at least for me, I think the real reason that you can build wealth as an employer as an entrepreneur versus just collecting a paycheck from somebody. It's not necessarily the tax code. It's the freedom that once you successfully create a business, which is not an easy thing to do, which is why very few people do it, not only do you make money off of your own efforts, but you make money off of the efforts of all the people you've hired and of all the capital that you've accumulated, and it allows you to enjoy a lot more leisure because now you have an income stream that you don't have to physically be there to generate it. And, the socialists will say, well, that's because you're exploiting your workers, but they're not exploited. The only reason they can earn that salary is because I hired them. So everybody benefits, but I benefit the most because I contribute the most. And I think when people just constantly have to show up 9 to 5 to collect a paycheck, they never really can get that level of financial freedom.
Well, that's a general rant, but there's a lack of financial education. There's just a lack, that's what unfair advantage is, what school never teach you about money. You have to understand the tax law. The tax law punishes employees. I'm not against employees, but the IRS is. The same as doctors and lawyers. Doctors and lawyers pay the highest tax rate in America.
Oh, I definitely agree. You've got if somebody is just if someone has capital, and I've mentioned this that I think this is unfair. The capital gains tax is 15%. So if somebody, let's say two people, inherit
long-term capital gain.
Yeah, but so let's say two people inherit a chunk of money from a deceased father. Let's say they each get $500,000. And one guy takes his $500,000 and invests in a medical education. He goes to school and he stays and he uses the money to pay for his education and become a doctor. And then he gets a job as a doctor and he has to pay 35-40% income taxes on what he earns. If the other guy takes his $500,000, and let's say the other guy takes his $500,000 and just starts trading and speculating in things, and he gets capital gains, he only pays 15%. So why should labor be taxed higher than capital? I don't think it's fair. It punishes labor, and it's one of the reasons that workers are falling further and further behind.
Well, Peter, if you let me talk, I'd be able to explain that to you.
Go ahead. The mic is yours.
There's two types of taxes in the investment world. Okay, there's capital gains and cash flow. In the accounting world, that's called portfolio income, which is capital gains. There's also passive income. If you have passive income and you invest in real estate, you have massive tax write-offs. So the way I strategized my life starting in 1973 was that my rich dad said to me, I had to take real estate courses. And I said, why? He says, you have to learn to manage debt. And second, I had to learn how to sell so I could be an entrepreneur. So today in my business, and I'm not a small business owner, I have large holdings. I make so much money, but every time I'm making money, I have to buy bigger pieces of real estate, large apartment houses. I was just in San Antonio, picked up another 1,100 apartment units from the bank.
I know you're doing the 1031 exchanges so that you can.
Peter, let me finish, please. Yeah. Look, if you want me on your program, I'm giving up my time. If you want to, this is going to be the Peter Schiff show with your philosophy, then all your audience is going to learn.
All right, go ahead.
I'm just explaining to you the way the system works is you have to be an entrepreneur. In basically business, real estate, oil and gas. The moment I don't like stocks. Stocks are for losers. That's gambling. But I know people make a lot of money in it, but that's not my game. So everybody can have a different game. I'm not saying it's right or wrong. It's not my game. But the moment I invest in my oil well, I get a 28% return on my money immediately. So let's say I put in either 10,000 or 100,000 or a million. Let's say I put 100,000 in, I get $28,000 back immediately. 28% return on my money via taxes. Mm-hmm. The average person doesn't understand that. So the reason I can pay no tax is because I make a lot of money in my business, but I'm converting it from ordinary income into passive income. I don't do the stupid thing about, the price of a stock went up, so I made some money. That's capital gains. Capital gains is 15%. Passive income can be 0%.
Right. You have
But that's what people have to understand.
Well, that's what I said earlier in the program.
I don't do stock trading. I don't flip houses.
Yeah. Well, we don't.
And that's what people think investing is, and that's gambling.
Well, I agree that if you're just buying stocks because you think they're going to go up, you're gambling. But if you're buying them because they have good value and you're collecting dividends, you're making investments.
Dividends are taxed to the highest rate possible also. That's what I'm trying to say to you guys.
Yeah, I understand.
Without a financial education, you'll do what Wall Street and the banks want you to do, which is trade stocks.
Right, but everybody can't just keep scaling up commercial real estate. And I think that the tax code
in commercial real estate, Peter.
Well, but that's where you're buying all these big properties in order to avoid paying the capital gains. Every time you sell one, you have to buy another one.
I don't sell them, Peter. I don't sell them. You think like a flipper. You're the capital gains guy. I'm a cash flow guy.
But I don't. You just said you bought the big apartment units. Wasn't that because you weren't doing a 1031 exchange?
I'm trying to, Peter. You got to listen. I buy it because I have so much other income. I'm converting ordinary income into passive.
Okay,
income.
All right. So as you generate income, you're buying more commercial real estate. Are you worried about a downturn in the commercial market with, let's say, a big double dip recession with higher interest rates? Are you worried that you might be overexposed in real estate?
I'll make more money because I don't buy for properties to go up. I am not. See, every time you say, well, my net worth is this, that's capital gains. Mm-hmm. My stock went up, that's capital gains. My house went up in value, that's capital gains. That's why people are in trouble. If you read Rich Dad, Poor Dad, the magic word is cash flow. That's also called passive income.
Right, but in order to get...
These are all tax terms.
Yeah, but in order to get the cash flow, you have to have your tenants paying rent. So if there's a really bad recession, what if your tenants can't pay the rent? Then the cash flow goes away.
That's a very good question. Why am I in San Antonio is a better question.
Probably why? Because Texas has got a better economy because of oil, and they got no state income tax.
Actually, the biggest thing in San Antonio is a company called USAA, 116,000 employees. My buildings are right next to their places, mm-hmm. and they also have huge medical complexes. So real estate is based primarily on debt, and not debt, on jobs. And so as long as there are jobs, and the government sponsors jobs, you'll do well.
Yeah, I agree. So one of the important things before you buy a piece of property is you need to look at these other situations to find if you always will be able to have tenants to rent it out. Now,
Peter, all I'm saying is this. You're not going to learn this crap in school, okay? You've got to I take weekend courses. I'm constantly learning about real estate, oil and gas. I understand tax law, asset protection. Stuff they don't teach you in school, and that's what unfair advantage is. What school will never teach you about money. They're telling you to go to school and invest in a 401k and save money. That's the worst thing you can do from a tax perspective.
If you're going to collect a paycheck, though, it does make sense to take some of that money and put it into one of these retirement plans, because otherwise you're going to pay taxes on it. At least if you put it in there, you can defer the taxes.
That's bullshit.
So you would advise against putting money into an IRA or any kind of retirement account, a pension? You would forego all that?
If you have no financial education, that's the best you can do. With a little bit of financial education, I don't have a 401k. I retired years ago at 47. My wife was 37.
Mm-hmm. But you don't have any
financial education. Saving money and a 401k is good, but from a tax perspective, you're paying ordinary income on it. It doesn't make sense to me. I don't have to do that bullshit.
Yeah.
That's what I'm trying to say. That's what financial education will do. It'll give you more choices. You say, well, I don't want to do what Robert does. I think I can do it this way. Good. But you have to make an educated decision. If you don't have an education, you'll put your money into a 401k. You'll buy a house, say it's an asset. If you read my stuff, I've always said your house is not an asset.
I know. I read that, and I 100% agree that a house is like a car. If you live in it, you're consuming it. It's depreciating. Investment property is an asset. Your residence is no different than your boat or your car.
No, I'll tell you what. I'll tell you something else. My boat, when they extended the Bush tax cuts, I bought a new boat in France. I got 100% tax write-off. The reason for that is because I put it into my charter business. See, I think like an entrepreneur. I don't think like a consumer. That's a very big difference. Mm-hmm. And the tax laws favor entrepreneurs, and they punish employees and doctors and lawyers who consume. If you can understand that, you'll understand my book. What school will never teach you about money? Unfair advantage.
All right.
I have made more money this year, and I paid nothing in tax legally because I'm doing what the tax department wants me to do.
I envy you tremendously. Anyway, thank you for coming on to the show. I will make sure and read the other 2/3 of this book and have a discussion with my accountants. Anyway, thanks. Don't go away, everybody. We got another full hour of the Peter Schiff Show coming up on SchiffRadio.com, the gold standard in talk radio.